Hey everyone, welcome back to Corporate Dakota, the place where we try to make sense of the crazy world of finance and business. Get ready because today we're diving deep into a company's latest financial report. And let me tell you, there are some interesting turns in this story. So buckle up as we decode Aytu BioPharma's S. EC filing, finding out how they're doing and what it means for their future. And hey, if you love getting clear, unbiased insights into these filings, make sure you hit that subscribe button. We also have a fantastic Discord community linked in the description below where we break down these reports and so much more. Alright, so what exactly are we looking at today? Aytu BioPharma incorporated a company focused on central nervous system diseases. This is their annual report for the year ending the 30th of June 2025. This is where they lay out their business strategy, their risks, and critically their financial health. Let S dive straight into the numbers. This is the balance sheet as of the 30th of June 2025 and 2024. Think of this as a snapshot of what the company owns, what it owes, and what its owners have invested. Right away, we see cash and cash equivalents at around $31 million in 2025, up from about $20 million in 2024, which is a positive sign. However, their accounts receivable also jumped significantly from about $23.5 million to $31.1 million. This means they are owed more money by their customers, which could be good if collected, but also carries credit risk. Now let S look at how the company actually made money. Total net revenue for the year ending the 30th of June 2025 was about $66.4 million. That is a small increase of about $1.2 million from 2024. This growth seems modest when you look at the cost of goods sold, which jumped by over $4.4 million. This jump in costs led to a decrease in their gross profit percentage from 75 to 69%. This means for every dollar of sales, they are keeping less money after paying for the direct costs of making their products. This is a trend we need to watch closely. The company spent about $20.9 million on selling and marketing in 2025, a decrease from $22 million in 2024. This could be due to cost-cutting measures, but they also expect this to increase in the future with the upcoming launch of a new drug. General and administrative expenses also decreased by about $2.6 million, down to $17.3 million. This also points to cost reduction efforts. Here is a big one: impairment expense jumped from zero in 2024 to over $8.2 million in 2025. This usually means that some of their assets have lost significant value, perhaps related to specific products or investments that are no longer performing as expected. This is a significant red flag. When you put all of this together, the company reported a loss from continuing operations before income tax expense of about $13.7 million in 2025. This is a larger loss compared to the $10.3 million loss in 2024. And then we have derivative warrant liabilities. The fair value of these warrants swung from a loss of $4 million in 2024 to a smaller loss of $1.7 million in 2025. This financial instrument is complex, but essentially it represents the changing value of warrants tied to the company. S stock price. Overall, the company reported a net loss of about $13.6 million for the year ending the 30th of June 2025. While this is better than the $15.8 million net loss in 2024, it is still a significant loss. Looking at where the money comes from, the ADHD portfolio remains their biggest revenue generator, bringing in $57.5 million for 2025. This is pretty stable compared to 2024. The pediatric portfolio, however, showed growth, increasing revenue to $8.7 million, up from $7.2 million in 2024. This is a positive trend, indicating their strategy to grow this segment might be working. So what is the company's strategy? They are focused on their prescription business and the upcoming launch of EXXUA, a new drug for major depressive disorder. They believe this drug could be a major growth catalyst, especially since it aims to address unmet needs like sexual dysfunction and weight gain associated with current treatments for depression. They are also continuing to focus on their ADHD and pediatric portfolios. They have also divested their consumer health business to simplify operations and focus on their core strengths. Now let's talk about risks. The company readily admits they have incurred losses since inception and cannot guarantee future profitability. This is a pretty standard statement for many pharma companies, but it is something investors always need to consider. They also state they may need to raise more money, and this funding might not be available on acceptable terms. This is critical because if they can't secure funding, it could severely impact their operations and growth plans. As of the 30th of June 2025, they had about $31 million in cash, which seems okay, but further expansion and launching a new drug will require significant capital. They have debt obligations, and the terms of their loan agreements place restrictions on their financial flexibility. This means they might not be able to make certain business moves without lender approval. Their success is heavily tied to two main things: the upcoming launch of EXXUA and the performance of their existing ADHD and pediatric products. The market for depression treatment is huge, but also very competitive. The ADHD market also faces generic competition, which could impact their pricing power and revenue. They are also involved in a patent infringement lawsuit related to their Adzynese drug. This kind of legal battle can be costly and distract from core business activities. We saw a similar issue with Teva Pharmaceuticals and Actavis previously. A significant financial risk is their heavy reliance on just 4 major customers for the majority of their revenue and accounts receivable. Losing even one of these could seriously hurt their financial performance. This concentration of customers is a major weakness. Looking at the overall picture, Aytu BioPharma is still in a growth and development phase. They have a promising new drug EXXUA on the horizon, but the path to profitability is clearly not guaranteed. The impairment expense and the reliance on a few key customers are definitely areas of concern. The modest revenue growth coupled with rising costs for goods sold is also a squeeze. However, the growth in their pediatric portfolio and their focused strategy on EXXUA could be the drivers they need to turn things around. The management seems aware of the risks and is taking steps to manage costs and focus on revenue-generating products. Ultimately, Aytu BioPharma is a company playing in a high-stakes industry. Their future hinges on the successful launch and market adoption of EXXUA and their ability to navigate competitive pressures and manage their financial resources effectively. The next few years will be critical. Alright, that is our breakdown of Aytu BioPharma's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think EXXUA will be a game changer, or are the risks too significant? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching. See you next time.